For more on finance, we're joined now by Rod North from the investor relations company Bourse Communications. Rod, good morning. Good to see you again.
Good morning.
So what do you think the European summit deal will mean for financial confidence internationally?
Well, I mean, it started off with, some really good reaction because we saw markets rise quite substantially on Friday. But of course, last night we've had a bit of a tripwire because Moody's, the credit rating agency, have come out and said that it wants to review all the credit ratings of all the European nations. So that's taken the market a bit by surprise. But why should it be surprised? Because at the end of the day, when you have these sorts of summits, it's all about debt. It's all about what these countries are going to do to get their debt down. So it's probably not surprising that Moody's will be taking the opportunity to look at all those nations and review their credit rating positions. But of course, what's happened last night is the market hasn't liked that news. So of course, we've seen Wall Street drop quite substantially.
At the same time, though, there's been a glimmer of good news for the American economy concerning those long grizzled US consumers.
Yes, there has. There's been some good news that's come out in terms of consumer confidence. We've seen that sort of rise to sort of a 6-month level, and this is sort of off the back of that recent news about their unemployment rate dropping below 9% for the first time. And of course, with this ability to be able to deal with debt as well that you just mentioned just a few moments ago, I think that is all showing sort of significant signs that the US is actually looking a lot better perhaps than it ever has been. But we're still going through a pretty rocky period where the share market sort of gyrating on good news, positive news, and then it's reacting, depending on what else comes out.
Looking closer to home, the Australian trade surplus narrowed slightly in the last couple of months.
Yes, it did. Look, I think the expectation was that the trade surplus would be about $2 billion, but it came in at $1.6 billion, which was a bit under expectation, which sort of just shows that exports had sort of slowed down a bit. And I mean, that's probably not to be not expected in the sort of current climate too, where the demand, for Australian resources out of China and other parts of the world at different times sort of fluctuate somewhat. But it's still a surplus, and 1.6 billion. I think we'd be happy to take that.
I reckon. And the market today,
market today probably will see the market drop about 1.1% off the back of that news about Moody's last night.
Rod North, good to talk to you. Thank you.
Thank you.